Hey, thanks, Game Theory. Appreciate you stopping by. And Pride Machinery. I will more than likely be doing more videos about Alibaba in the future. I just kind of got really stuck into studying Pat Dorsey, in particular this book right here. So, Alibaba, in my opinion, not much has been going on with it. The price keeps going down, but I don't think that the business has fundamentally changed. That's just my take right now. So yeah, but yeah, I'm sure I'll be doing more Alibaba videos in the future. Amazon and Tesla. Well, those are both fairly complicated companies. I'll say Amazon is definitely a company that I'm interested in. I was watching a Monish Pabrai interview, I don't know, a few weeks back, and he said that it's probably a mistake not to buy Amazon. I feel like that's been the case for the past 20 years probably. It's been a mistake not to buy Amazon. And my question that I would want to answer is it different this time? Why not me? So yeah, but that's another beast. Amazon is huge. Tesla, on the other hand, I don't think I have much interest in investing in Tesla. I believe that the product, or at least the goal of the product, which is to obviously make money, but to spread, the availability of electric powered vehicles, is a good thing. I think Tesla right now is potentially overvalued. So yeah, that's just my take. But I haven't really studied Tesla. It gets a lot of flack and it also gets a lot of praise. So I feel like it's one of those companies that you either hate or you are the biggest fanboy. So yeah, we'll see where it goes from here. But yeah, I'm probably gonna sit on the sidelines with Tesla. Car business is a tough business, and at the end of the day, I think Tesla wants to brand itself as a tech company, but they're essentially competing in the automobile industry right now. Now, there are other upside things like insurance or software. Maybe they could lease software. I don't know. It's a tough business. Oh, sorry, Igor. Yeah, I probably had the mic muted on accident, or maybe I was too far away from the mic. Yeah. I do plan on doing more of these live sessions. Some of them I want to be focused on, maybe group working sessions where we can hold ourselves accountable to stick to, the plans that we made for our future selves. So in this case, I'm trying to get some reading done. I want to make some more headway through this book. But yeah, I like the concept of live Q&A sessions as well. And I probably knew inevitably that this would turn into a Q&A session, but that's okay. I don't mind. Top 5 books that come to my mind on investments. Yeah, the number one book is always going to be Forever and Always, Poor Charlie's Almanac. It's kind of an expensive book, but it's worth its weight in gold, and very likely it could replace a college education for most people. It truly is the best book that I have ever bought, and I couldn't be happier that I was introduced to that as my first investing book. And then I would say The Intelligent Investor is a tough one. It is foundational, chapters 8 and 20. They definitely must reads. I don't know if the whole book is super useful for a beginner investor, but I would definitely recommend chapters 8 and 20 in that. And then another great one is the Warren Buffett Way. That's also, if you want to wrap your head around Warren Buffett's investing framework, then that is the go-to book that I would recommend. It's outstanding. It basically lays out exactly what the author thinks that Buffett thinks about when he's looking at a business. So it's a wonderful one. And actually, I would probably recommend this book. So far, I'm really impressed because thinking about moats, if you're interested in investing in long-term compounders, then you definitely want to have this mental model of thinking about moats. So this little book that builds wealth is a great one. And Competition Demystified by Bruce Greenwald, who's a professor, or I don't know if he still is, but he was at the Columbia Business School for Graham and Dodd value investing. It's also another excellent book to understand the fundamentals of competition in business. So yeah, I think that was 5. And then maybe the little book that still beats the market is a good one. And yeah, You Can Be a Stock Market Genius Too by Joel Greenblatt, another excellent book. Talks about special situations, which can be really important and a good way to grow your wealth if you don't have, if you have the time to dig through these places that other people won't. Pride Machinery thinks that real estate is easier, and hey, if that's your cup of tea, I think real estate is tough. It's hard to, maybe it's the management part of real estate that turns me off. So the number one requisite for me would be to get some sort of property manager if I were ever to invest in real estate. But I can see valuing real estate might be easy. I don't know. I'm not an expert. I've really never tried investing seriously in real estate. So that's definitely something that I would be eager to learn more about. But so far I've just focused primarily on long equities. So yeah. Igor says, I think the more we read books about investing, the less we know about investments. Probably, to know about economy, human behavior, and as we read everything, philosophy, history. I 100% agree with that sentiment. It seems like every new book I read, it introduces, 100 new problems that you've never thought of, never considered, never been introduced to in your life. And that's just that many more things that you don't know. And it's humbling, but it's also an amazing experience because I think there's this curve. I think I've seen some graph about it where total beginners think they know everything. And as you continue on the path to education, you hit this trough of confidence and certainty in your abilities where you realize that you don't know anything. And then as you continue back up to the peak of mastery where people like Charlie Munger and Warren Buffett are, then you truly understand your subject, but you also understand what you don't know. So I completely agree with that assessment. Seoul, investing in Seoul. That's an interesting place. I've never been, but it's an interesting place for investment. I've seen Monish Pabrai has made investments there in the past, and actually I think he has at least one investment in South Korea right now in Nice Holdings. I think that's the one. But yeah, I think there's a lot of opportunity there from what super investors like Monish Pabrai have said. And Warren Buffett has stated in the past that he's gone through Korean handbooks and picked up really cheap companies. So there's a lot of quantitatively cheap companies there. I don't know how to invest in Seoul. Maybe I can do it through Interactive Brokers, but we'll see. Igor, that's pretty true. About there's a limit to how many investing books we actually need to read. Understanding the fundamentals in a couple of the books that I mentioned, for instance, that's a few ways to reach that conclusion. But then beyond just regular investing, you can add to your repertoire of information by reading Warren Buffett's letters to investors, and there you start to learn more about how to think about businesses like an owner and an operator of a business, which I think that's the next step of enlightenment towards investing. And then from there, you really just need to apply that framework, I'm not being prescriptive here. What I'm trying to do is to apply that framework to actual companies by reading their annual reports, looking through their financials, trying to understand what the business actually does, what it produces, what's its product, why their competition hates them, why their customers love them, things like that, and try to apply those ideas to hopefully a company with a reasonable valuation. Hey, thanks, Game Theory. I really appreciate that. Big shout out to the guys at Punch Card Investing, Tom, Frank, Brad, Karan, and Jack. They're all excellent. I hope to consider them my peers in this investing journey. I appreciate that shout out. I love listening to their podcast, their weekly podcast as well. They've been keeping it up for months at this point, and I hope it keeps going for a long time. I think it's good to be open and frank, about what you're thinking about with investments. So, yeah, thank you. Pride Machinery says the smart answer is there's a lot to know about investments, and there's a ton about investments that I don't know. I mean, I don't know most of what there is to know about investments. There's certain types of investing that I have never touched, probably never will touch, including shorting or complicated options or anything of that nature. That's probably not where I'm going to go, simply because, I don't know if I'm going to be able to understand it, to be honest. I think I can understand businesses, but the financial machinery around that, I don't know. We'll see. I just don't really have an interest in it either. So, you bought Rain Industries because Pibrai had 2 years ago and saw it on YouTube. You bought it last March. Learned more about investing and the business after I owned it. That's a great point. And you were forced to because it grew so much and truly understand the meaning of really knowing a business after you own it. Yeah, I completely agree. Every single investment, if it goes up or down, you can do all the initial work you want, but once you've officially become a true business owner, in the sense that you own shares in the company, I think you do have a better pulse on the business, and you continually learn more about its competitors, because the initial step to making the investment is probably just the beginning of your let's say learning about that company. So I agree with you. Misery says annual reports actually give me more insight about investing instead of all the books I went through. Excellent point. Yeah, I agree with you there. There is so much dense information in an annual report about a specific business, and you might also be able to glean things about the industry, information about the competitors, all that stuff. And yeah, they're daunting because usually they're long, and usually they're filled with a lot of numbers and risk statements and footnotes and all those things. But I do think that that's the best way to actually get the firsthand source about how a business actually operates, I'll say. Game Theory from India, 25. If you would ever like any advice or questions about investing in India, please let me know. Thanks for that shout out. That's great. I will keep that in mind. I have yet to make any investments in India. I think in the US I'm able to access some of the Indian companies through interactive brokers. One of those being potentially Rain Industries. So yeah, of course that's in Pibrai's portfolio, so that's always an interesting one. I haven't studied that company at all, so, but yeah, I'll keep that in mind. Google is the company right now. I think Google, since inception, I think Google has always been the company. I would say that I would not be upset to have Google in my portfolio permanently. It's probably that good of a company. Their core business has not been disrupted, potentially could be eaten away into, but they're also eating into other businesses such as in the cloud. So yeah, I mean, they make so much high margin cash that they can have they're an ultimate spawner, an apex spawner. So yeah, it's wonderful. Um, Google and Amazon, it might be cliche to think that you would invest in the FANG companies, but honestly, they're in that position of renown for a reason. Well, game theory, I can give you I can maybe do a community post if I'm looking for help in India, and maybe you can respond there, and we can, we could connect that way. Yeah, no problem, Igor. Yeah, thanks for the comments and questions as well. This is fun. Marco says 3 positions on my portfolio right now. Do you prefer concentration to diversification? Yeah, 3 positions. I envy you in a way. I definitely prefer concentration. I don't know if I'm odd or if it's just the way I'm wired, but I don't feel comfortable owning a lot of companies, because then we were just talking about it a little bit earlier, how in investing, as you continue to grow, you really understand what you don't know. And I know that my portfolio companies right now, there's so much that I probably don't know. So I'm continually just trying to hone in on understanding a few companies that I think I can understand right now, and potentially what the future of the business looks like. So I would rather own 3 predictable long-term compounders than 20 or even 10 companies that I have a decent understanding of, but maybe not enough to make me feel comfortable in being an actual owner of a business. Yeah, and about Google, they have YouTube, of course, video content, creator economy. That's just one more avenue for them to make money on ads. And yeah, and one thing to note is that YouTube gaming is also becoming a bigger competitor in the the live streaming space for gaming, or live stream. So it seems like YouTube is really making a push in that regard as well. So just one more avenue for cash flow. And again, they have the upfront costs of servers and building out the tools for with the developers and all that. But once that's in place, they pop on another server, capacity is there, and here we go. I mean, I don't know how many. What's the term? It's more than gigabytes. The terabytes. No, what's more than terabytes? But yeah, you get what I'm saying. Every day there's too much information being stored and displayed. Another opportunity to make money from AdSense. Hey, Adrian. No, I started this. I was just reading and hoping to make this an accountability session for myself too. To just stay up on my reading, because sometimes I tend to fall behind and get lazy. So I thought this might keep me in check, and it's turned into something about investing, which is okay. So I'm happy to talk. Yes, this whole thing will be on my channel. I think I'll make a playlist about live sessions, so you can check that there. And I'll probably do a community post as well, just because this was impromptu. So yeah, it'll be there. Game theory, do you own Baba? Yes, I do. It's one of my top 3 positions. I think that the fundamental business is wonderful, and I very much want to be a part of the ownership of the cloud infrastructure. Now, I know I say part of the ownership, and I understand that I'm invested in Alibaba through the variable interest entity, which is technically not ownership. So yeah, that's. But if I do, I think the opportunity is just the risk reward is just way too in my favor as an investor to not go there. Yeah, so the price keeps going down. I don't really care what happens to the price. I don't think the business has changed materially from any regulations or any instruction or potential investments that they're making into the future for prosperity of China that will also help their company. So yeah, bottom line, I'm still bullish on Alibaba. Hi Martin, nice to see you. Thanks for joining. Misery asks, have you ever tried to read random annual reports? I found that very intriguing to be able to see all kinds of issues and trying to estimate somewhat fair value in case you get to know what they do. That is an interesting thought. I like that idea. When you frame it like that, it is an educational experience. So maybe that is something that we can carve out time for. My biggest constraint right now is actually time to not only stay up with what I'm already invested in and also managing this YouTube channel. I have a day job, other obligations and things of that nature. So, but that is a really interesting idea because exploring any specific company isn't really a wasted opportunity or waste of time or anything. In fact, it's a really good idea, I think, to if you want to invest in long-term compounders, is to understand them, even if you think that they're overvalued. So say I think Amazon is overvalued. It's not a waste of time to understand that business because someday in the future, there's a chance that the stock price will go down. Just, we saw it back in March of 2020, and that appeared to be a pretty good time to buy Amazon, but I didn't have the confidence there or the understanding necessary to buy Amazon. But when you can find the very best companies at a really good price, then, that's a no-brainer. And I made a mistake there. Do I think Baba has hit bottom or maybe wait another week? I love Baba and want to buy another 2,000 shares. Well, yeah, I don't know. I don't know, man. I can't make those predictions. Nobody can, honestly. It feels like it's been hovering around this price range for a while, but I thought it might stop going down. I didn't think it was going to go down. I thought it was just going to go up. That's why I invested in the company. But yeah, I can't make any predictions or give any advice about that because there's no way to know. News can come out and completely transform or continue to transform the public's opinion, the media's opinion about the company. And even if it's unfounded or if it is founded, there's nothing I can do to predict that. So, Misery, do you mean random annual reports just as in just picking one out of a hat, you're saying, basically? Which I think that's a cool idea. Say this week I picked out one that's, an oil and gas company or something. Maybe I don't know much about that industry. So reading an annual report from a company in that industry is going to teach me a lot about that specific company and that industry. Also, it potentially might make me interested in exploring other companies in that area as well. So I definitely think that's a cool strategy, and I might give that a shot. So I don't know how. Maybe you would just pick a random ticker and then go from there. I was thinking about the logistics of actually picking a random annual report. So yeah, cool. Marco, thanks for being here. Thanks for watching the videos. I see you comment on my videos all the time, so really appreciate the support there. Adrian asks, do I use options when I invest? What broker do I personally recommend? No sponsors. Yeah, no sponsors. I don't use options. My investing approach is very vanilla. It's just buy equities in the hopes that the company will go up. I've never shorted, probably never will short. One thing I'm looking into, but I haven't done, is maybe selling put options for companies that I wouldn't mind owning at a lower price anyway. I haven't gotten to that, but that's one way that I've seen some investors like Phil Town will use that as a way to capture some upside in the case that a company goes down in price. But no, yeah, so far I buy an equity, buy it long, and as far as brokerages are concerned, I have accounts with TD Ameritrade and Interactive Brokers. I opened the Interactive Brokers account because they have access, or they offer access to a bunch of foreign markets. So if I wanted to invest directly in a Japanese company, I could do so through Interactive Brokers. So I don't know if those are really recommendations. That's just what I use. As long as the fee, well, that's a whole nother topic. But with the payment for order flow and all that, but the fees cannot be egregious. But I would probably rather pay a fee through my broker than have the trades go through payment for order flow, because I can't see how much I'm actually being charged for that trade. Let's see. Yeah, I agree with that. Nobody can predict the bottom. We can only try to understand a business. That's pretty much the bottom line for me. If I have such high conviction about the future, am I not tempted to keep adding? Reminds me of a Buffett quote: "If it falls and we like the business, we buy more of it, and we are happy." I am constantly tempted to keep adding. It's a matter of having the dry gunpowder to add. But yeah, that's the situation. I'm always tempted to add to the companies that I own, even my biggest position. So Martin says, just stumbled upon the channel a couple of hours ago and really enjoying the insights and thoughts. Feel like I stumbled upon a little gem of a channel. Thanks for sharing. Keep it up. Martin, thank you so much. I really appreciate it. Yeah, this is something fun that I do in my spare hours, besides investing and working, spending time with my family and all that. So I'm glad it's providing some value for you for these past couple hours, and hope you stick around for more. Thanks, Adrian. I'd like to know if you use any brokerage that you really like or prefer. Duck Blast asks, you said you work in software in a video. If you do, what advice do you have for a current college student going into computer science? Thanks. Keep up the great content. All right. Advice that I have would be, okay, so I'll tell you my background of computer science in college. And that was, I took a computer science 101 class in Java. And that was the last computer science class I took. And I pivoted from that to English. So I did not find the track in college to be very, very helpful for me. I think I later went on to learn from a boot camp style program, which taught me how to practically begin web development. So the number one thing I would say is that, at least when I was going through college, the computer science courses were were designed to help you understand the logic that goes into what makes computers tick, but it was not practical for understanding how to actually build something. So build as much as you can in your own time, and maybe take courses that focus on the practicalities of building software, because that's 100% the best way to learn software development. Building web apps, or if you're into developing on iOS, develop an app, even if it's something simple like a calculator, or even a tutorial online that you're finding. Necessity is the mother of invention. So that's my advice to you, is build something that really scratches your itch, and you will learn more about how to become a programmer or developer than you ever would just sitting in a class. But I'm not saying that the classes aren't important, and they will help you understand the basics of computers and logic. So yeah, hope that's helpful. I don't know. Now, Game Theory, thanks for stopping by. Good night. You keep compounding as well. And Martin, thank you. Cheers to you, man. And Duck Blast, it also goes back to what your goals are with, going into computer science. If you want to become an entrepreneur, or if you just want to become a developer for a company or whatever, I think the advice might change. Well, no, it wouldn't. If you want to keep learning, I think computer science computer science and investing are maybe two of the best fields to go into for continuous learning. So keep up the good work. I'm rooting for you. You're going to do well. Adrian, at the beginning, I used to use a small one called Drive Wealth because I live abroad, but I moved to IB. Okay. Yeah, I really appreciate all the markets. I can access Indian markets. I can access Japanese, Korean, maybe. So, yeah, and Hong Kong as well. So, yeah, IB is good. Yo, Game Theory, thanks for the 100 rupee donation. Wow, man, thank you. I didn't see that. I hope you didn't go to bed already before I got to thank you. I really appreciate it. Thank you. Means a lot. Yeah, I'll let you know if I need any assistance with Indian markets or anything like that. Appreciate it. Thank you. For anyone in the chat, I'd like to hear actually what you are reading right now, because I'm always looking for book recommendations, and if I'm planning on doing more of these sort of live reading sessions where I'm almost a decent chunk through this book, but I'd love to hear what you're reading so I can always get more information. Martin, just wondering, when you screen for stocks or check out companies, are there any specific red flags you look out for? I'll tell you, a lot of my stock screening, I've been relying on super investors lately. But one thing, when I am looking at a company, one of the first things I do is go to the balance sheet and look at their net debt position. I really don't like to see a company with a positive net debt position. So if the company, that's not really a red flag, but that's one of the quick metrics I look at to see, okay, even if I invest in this company, what are the chances that they're going to go bankrupt? Because that's not okay. Plain and simple. So other red flags. I don't like when companies talk about EBITDA. As Warren Buffett and as Charlie Munger has said so eloquently, EBITDA is shorthand for bullshit earnings. I really appreciate when management talks about either cash flow or owner earnings or concepts like that, and don't focus on trying to remove expenses from the equation that are truly expenses. That's kind of a red flag for me. Another red flag is, it's not really a red flag, it's a fundamental concept of investing, which is this a company that I can understand, or is it a company that I feel comfortable that I could learn enough to understand the company in a fairly short amount of time? One thing that is difficult for me is to detect financial shenanigans, if you will, manipulations. So there's this really good book that I need to reread to kind of brush up on this, and I think it's called Financial Shenanigans, where that term comes from. So thanks for the reminder that I need to, I need to brush up on that, because yeah, sometimes management, if they have the right incentive, will screw some numbers. But yeah, hope that answers your question. Yeah, Marco, I always have this book sitting right next to me, always. Yeah, I'm really looking. I was still gonna do more videos on this book. I haven't gotten around to it yet, but the Monish Pabrai chapter in particular, the Nick Sleep chapter. I'm actually rereading the what is it, Howard Marks chapter, which I thought was really cool because he talks a lot about sort of what one of the themes of this session has been: knowing what you know and knowing what you don't know, and dealing with this uncertainty that we can have with companies. So yeah, it's just a good reminder. And Marx, as much as he says that you can't really predict the future, I think he fancies himself somewhat of a macro forecaster. so I think he thinks that the market's really expensive right now, which might be a controversial opinion. I don't really know the answer onto that either, but yeah, that's a little off topic. Yeah, Marco, goodwill. That's a tricky one. Even companies with an enormous amount of goodwill, including Google, who knows what the economic value of that goodwill is? That's a really tough one. Asset-light companies, it's a wonderful business to operate, but yeah, the accounting can be really tricky. And dare I say that some standards might need to actually change. I don't know how you quantify that though. That's a tough one. You're right. Goodwill. It's a tough one. Duck Blast is reading Guy Spears' book. Yeah, Education of a Value Investor is one of the best books you can read for investing. I forget who was asking earlier about the books. Was it Game Theory? Maybe he'll see this later, but yeah, awesome book. And it was co-written by William Green, the author of Richer, Wiser, Happier. So that guy is a wonderful writer. I'm definitely interested in writing. I almost tried to be a full-time author or writer, but yeah. So he's talented. That's for sure. He really knows how to tell a story. I love William Green. Misery says, speaking of creative financials, I've spent tons of times on Netflix without being able to understand what they're doing with their financials. I'm not even interested in owning the company. Yeah. I mean, at the end of the day, I think conceptually we can understand why Netflix is a great business. But if you see something troubling in the financials, or you can't understand the financials, maybe either go to an accounting expert or take a pass. I mean, it's not a wasted effort to try to spend time on a company. But yeah, the accounting can get extremely dense, extremely confusing. So yeah, maybe I'll take a look at that because I haven't really read a Netflix annual report or anything like that. So that's an interesting one. Yeah, and as the bigger the company, another sort of concept is that the bigger the company gets, the annual reports obviously get more and more bloated. So if you're looking at a big company with a really bloated annual report, now Alibaba, for instance, is a really big company with a really big annual report, and some investors have called that out as a potential red flag. So yeah, something to keep in mind. Martin, I'm currently trying to decide on which book to read first. Is there one specific book you would recommend I pick up first? Thanks. Well, it depends on how far you are into your process. If you don't have a basic understanding of an investing framework, then I would recommend Poor Charlie's Almanac and The Warren Buffett Way as 2 books to get started. But if you are looking for a more holistic view about investing concepts, then yeah, Richer, Wiser, Happier is a great place to stop next, because he covers a lot of different profiles of super investors, and he spent probably a decade researching this book with interviews from some of my favorite investors, including Charlie Munger and Monish Pabrai. So you basically get to pick their brains for $15. Definitely a good one. Michael asks, what do I think of The Snowball? Yeah, I like that book a lot. I've read The Snowball, and I've read Lowenstein's biography, Buffett, The Making of an American Capitalist. I think The Snowball was good, but I think I prefer The Making of American Capitalist because it wasn't actually sanctioned by Buffett or commissioned by Buffett, or however The Snowball was. So I feel like he told a little bit more of maybe the truth. Yeah, that's what I'm getting at. He didn't sugarcoat things as much as potentially things were sugarcoated in The Snowball. But yeah, biographies are interesting. Buffett has had a very interesting life, both financially and personally, so I would recommend that one too. I mean, you should probably read all the Buffett biographies for sure. But I think Alice Schroeder did have prime access to Buffett, so there are some little nuggets in there that I think are pretty useful. Especially, I think there's a part where she talks about what she learned about actually investing in companies from Buffett. So it's worth reading just for that. Have you tried capital allocation? No, I have not. I feel like that's been sitting in my Amazon book list for a while. If you can tell me the author, maybe I might add that one. Yeah, Adrian, I was at the bookstore the other day and had my hands on that one, but I ended up picking up a few different other ones. But yeah, that's one I've seen a sort of a brief summary of it, but that's one I'm really interested in diving into more, for sure. But yeah, thanks for that. That next time I go to the bookstore, I'm definitely picking up Psychology of Money. It all started with Peter Lynch for you, Marco. That's one investor I still have not read his books, and it also that's where it started for. That's where it started for Monish Pabrai as well. He read a Peter Lynch book, which took him to Warren Buffett, and then the rest is history. So I think I've heard kind of the general concept of Lynch, but he's definitely. I've heard a lot of investors praise him, so he's definitely one that I need to check out too. Misery, you're talking about that's one of the biographies about Buffett capital allocation. Yeah, early Buffett is fascinating. I really wish there could be some sort of psychological profile about this guy. I mean, clearly he's a genius, and I want to know. It's been said that he read, all the investing books front to back in his local library or whatever, and that's one interesting child. I will say that he must really love it, and when you found a passion like that. It must be really rewarding to see that he's the best in the world at it, as he should be. So, yeah. Yeah, Marco, would you recommend One Up on Wall Street, or there's another one of Lynch's books? What would you say is a better one to start with for Lynch? And then Value Investing by Bruce Greenwald. Yeah, I read the first edition a while back. I have started and stopped the new release, which came out, I think, last year. maybe earlier this year. But in the new edition, he discusses how to value growth. So I think that's going to be really valuable. And plus, in the end, there's I think there are a bunch of biographies or mini biographies about different investors. One of which is Buffett. So I can second that. One Up on Wall Street. Okay. Yeah. I'll definitely check that one out. It's been too long. I've gotten a few comments about Lynch, so in my videos. So so I would definitely start with the newer edition of Value Investing from Graham and Buffett and beyond. It's more approachable than something like The Intelligent Investor, which might be blasphemy, but I don't care. But it has a modern approach to the concept of value investing. Yeah. That's absolutely one of the first books I would recommend investors read too. Competition Demystified. It's an outstanding book. If you have which I had no understanding of businesses, I never thought about that. And that was one of the first books. That and Poor Charlie's Almanac were some of the first few books on investing that I read. And I think that's a good foundation for sure. Yeah, good call outs. Yeah. All right, guys. I don't know if you can tell, but my voice is kind of starting to go. So, yeah, I've been at this for about an hour. So I'm probably going to get on out of here. But we got one more. I tried starting Poor Charlie's Almanac. It seemed very bizarre. It didn't get more than a page or two in. I would implore you to continue reading. Honestly, it was a life-changing book for me. So ideally, I would read that book at least once a year. I think the beginning of the book is about Charlie's. It's a bit about Charlie's biography, his performance with his fund and stuff, which maybe that's not that interesting to you, but at least read the Psychology of Human Misjudgment, which is maybe the last chapter. But those talks, the transcripts of those talks are just invaluable. So if you can, I would highly recommend you give it another shot. Yeah, it is hard to find and expensive. Yeah. Save up. No, but yeah, I wish it were a little bit more accessible, price-wise, because I think it's $50 or something like that, which is a lot to spend on a book. And it's a big book, but I mean, yeah, $50. In hindsight, it's definitely worth it. But imagine if I had, I can't imagine if I hadn't bought it just because of the price. So yeah, some things are an investment, and it really should be required reading in a lot of high school curriculums, I think, is my honest opinion. It should be a course in itself. But yeah. Okay, thanks for sticking around, everybody. I really appreciate you spending time with me today on this Sunday. Oh, well, yeah, $100. Then there has been inflation in play for Poor Charlie's Almanac. Yeah, that's a lot. I don't know if there's a Kindle version or a PDF version or something that you might be able to buy. But yeah, best of luck with that. You'll stick to your $300 a month day trading course? Yeah. No, $50 could change your life. But thanks for that excellent joke to end the session with, Martin. All right, everybody. Thank you so much. I will catch you in the next one, and happy investing, everybody. Thank you. Enjoy your Sunday.